Good day, everyone. Today we're here with Adam Drury. He's from our offshore office. He's actually recently moved to South Africa. He was worked in Jersey for a number of years, and he co-manages several of the offshore strategies. I'll be asking Adam some questions about how he views the world at the moment, where he thinks everything is going, as well as getting some insights into what's going on in the world and what investors should be paying attention to. Good morning, Adam.
Morning, Albert. Thank you.
How are you doing?
Very well, thank you. Very glad to be here.
So at the moment, we seem to be at a little bit of a, let's say, discontinuity or a tipping point. For the last, let's say, 12 to 18 months, a lot of the conversation was, is there inflation? Will there be inflation? Why is there inflation? Why is inflation so high? And what's going on? And we seem to be at an inflection point. Am I reading this wrong? Or should we be paying attention to something else at the moment?
Yeah, you're right. So inflation has definitely been the topic of conversation over the last couple of years. So if I look at, for example, the US economy, so for example, at the moment, CPI, Consumer Price Index, is roughly around 9.1%. And it's basically been driven in the past year or so by supply constraints. Supply constraints and cost push inflation that has really pushed inflation up. When we look at inflation today, though, and we factor in the sort of growth background, or as we like to call it, the inflation and growth paradigm, we're starting to see a bit of a shift from, cost push inflation and actually to the demand side, which is actually starting to control things a bit more. Going forwards, we think that inflation, especially in the US and many of the developed markets, have really started to peak. We're seeing certain tailwinds like housing that's keeping it relatively high, but a real unraveling in some of those supply constraints that were there before are starting to lead to a bit of an easing in inflation.
So, historically high inflation in the US, 9.1%. First time in my lifetime that I can recall US inflation actually being not just slightly above South African inflation, but meaningfully above it. How fast do you think we should expect inflation to come down over the next couple of months and quarters?
Yeah, it's a great question and a very difficult one to answer. So we do believe that inflation is certainly on a downward trajectory. I would say it's probably going to be a bit more sticky. And what do I mean by sticky? I think it's probably going to stay around that sort of 9, maybe 8% level over the next quarter. Later in the year and going into next year, I think that actually it could come down quite drastically. And obviously the Fed target, and like most developed world markets, they target roughly around a 2% level in inflation. I believe that sort of next year, we'll probably be looking at sort of around a 3 to 4% level early in the year. So that's primarily going to come from what we believe to be the demand destruction, people not wanting to spend quite as much as we go into more of a growth slowdown and a bit more of a recessionary environment within the US.
So relatively recently, there was the July Fed meeting. And if there's one person who I think thinks more about inflation than we do, it's Chairman Powell. There were a couple of interesting things coming out of the meeting. What do you think was the most interesting outcome from the recent Fed meeting?
So I'd say the most interesting thing to come out of it was, I'd say for the first time, Powell's starting now to look at the end of the hiking cycle. So what do I mean by that? The last 3 meetings that took place this year, we have seen consecutive increases in the Fed rate, 25 basis points, 50 basis points, 75 basis points now. He's starting to talk to the end of the sort of hiking cycle. So there was the first time where he's sort of alluding to, whilst there's going to most likely be another 75 basis point hike in September's meeting, he's starting to look through that now and look towards a bit of a slowdown in the economy. Still very much believes that we're not in recession, but I think that the economic data over the next couple of months might sway him to be a little less optimistic.
There's an old saying that says a general always fights the last war, right? So, what are the things that people should be paying attention to in markets that you think might not be getting the degree of attention that's required?
Yeah, that's a great question. So going back again to the Fed meeting, one thing that Powell's always reiterated is employment is incredibly strong. So at the moment in the US, unemployment is at around 3.6%. It's at a very low level. We're starting now to see what I would refer to as a bit of cracking, let's say, in the labour market. And Powell even actually alluded to it in the last meeting that, with these increases in the Fed rate hikes, you're going to start to see a softening in employment. I believe we are starting to see that actually already. If we look at, for example, unemployment claims in the US, they're starting to increase. So since sort of around March, April time, we're starting to see a bit of a trend upwards in that, both new and existing claims. And we're also starting to see now companies lay off more staff, more announcements of job cuts, basically.
So now let's call it the $1 million question. Speaking to South African audience, what should they consider doing kind of at this moment in time, third quarter of 2022? Where should they be considering to moving the money? What are the types of solutions they should consider to look at?
So in these times of uncertainty, I think a multi-asset strategy is the perfect strategy, simply because you're going to allow your investment manager to manage the money for you, essentially. We believe that there's currently value add in holding a decent cash balance, a dollar cash balance at the moment, but we're waiting now for that Fed pivot, and at some point, when Powell does become less hawkish and actually the rating cycle that we mentioned before starts to turn down, it's going to be a great time for risk assets like equity. So investing in a multi-asset strategy essentially allows clients to outsource that management for them, be more risk averse now, but at some point in the cycle move into that higher equity-like risk.
Because that's one of the things that that people often forget, is that the investment cycle and economic cycle don't necessarily tie up. One sometimes leads to the other. So clients shouldn't necessarily wait for the economy to be rosy again before they start putting their money in the markets.
Very good point. So with investing, a lot of these things depend on time horizon, as you know. So a lower risk type client or a client with a shorter horizon naturally go to a lower risk strategy. So they might go more into fixed income, whereas someone that's willing to hold their investment for a longer period of time, 3 + 5 years, might go in more of a equity, higher risk type strategy. So you're right, we've seen obviously capitulation in markets, risk markets internationally, i.e. equity markets, housing price and what have you. So that it could be seen as a good time when valuations are as low as they are to go in. I would say there's still potentially downside as well to equity, which is why, you know, timing at times like this can also be very key.
Thanks, Adam. That's all we have time for today. I hope you have success in the markets over the next couple of months and quarters, and that the clients can benefit from it. And hope to talk to you again soon.
Likewise, thank you very much.